and I had a cost of goods sold. So you're always doing what we did last week. Constantly updating your books every single time. So what we did last week, that is perpetual. Now that may not be realistic for small companies who don't have a computer system like Walmart where they just scan something and it automatically updates. They have to rely on the periodic method. And this is the periodic method is similar to what one of your homework was last week, where we had an inventory T account. It wasn't a T account, you had to do an income statement, but you could look at it from the T account perspective. And you needed to determine at the very end what was your cost of goods sold. Remember going through that one where we had to determine what the cost of goods sold was based on all the other information given? Here, I already know the cost of goods sold with this method. I just add them all up because I've done it every single entry. And I just look at the cost of goods sold T account. This one, with this method, with the periodic method, I only do one cost of goods sold entry at the very end, whether it's the end of the day, because you update things every day, or maybe you update it every week. Probably no fewer than once a week. You're going to want to keep your inventory updated so you know if you need to reorder. But remember, you start with your beginning inventory, and then I'm going to make an equation of this in a minute. You start with whatever you had to start with for the day. I had 500 units. I'm just going to put in some numbers to help so you can visualize it maybe. And then I had some purchases that I went out and bought. And maybe I bought 5,000 worth. Now let's make it a little different so we can see the difference. 6,000. Maybe I returned something. Let's say $400 worth. And then at the end of the day, my ending balance was $600 in inventory. So that's why you won't miss it. Having to go through and count this, if you only have 4 or 5 items to count, not hard to do. But if you have a whole bunch of small little items and you have to get the ending inventory, counting it every day may be kind of a chore. So you may only do it once a week, or however often you need to do it. What's my cost? How much goods did I sell? Yeah, 5,500. Good. I added up. I have $6,500 ready to sell, less the $400 that I had to give back, so that's $6,100 ready to sell. $6,100 ready to sell. I have $600 left out of those $6,100. That means I got rid of $5,500. You would make one journal entry for this big cost of goods sold. One entry instead of doing it 50 different times for 50 different sales with the Perpetual. Now this way is definitely more up to date, but it may not be practical. So your periodic, how it's kind of laid out, kind of a formula, you take your beginning inventory, add in any of your purchases that you bought since you counted your inventory. And included in this purchase number would of course be any shipping that you had to pay for. So FOB shipping point. Minus any returns, because we don't count the returns. Maybe even minus discounts, because if we had a purchase discount, we wouldn't count that either. What's all this equal so far? what's the terminology that we hit just briefly last week when we were doing the Wiley Plus problem? Taking what I had to start with, plus what I bought, minus the little bit that I had to give back because of returns. All of that equals...
Cost of goods available for sale?
Yeah, good. Cost of goods available for sale. So in my other problem, this number was 6,100, based on my made-up little example over here. 6,100 items that I have ready to sell. And then all you got to do to get cost of goods sold is subtract out your ending inventory. And that's how some companies have to get their cost of goods sold, if they don't keep track of it on an every sale like the Perpetual method would do. Big companies that use computer scanners, that's very easy to do Perpetual. Smaller companies, not as much. And when I do it like this, you would really need to do it for every piece of inventory you have, every different type. So I used the example before of vacuum cleaners. If I sell an XL3000, I'm going to have to do this to figure out my cost of goods sold. I'd really want to do it for each type of vacuum that I have. I would want to know how many of these XL3000s do I have left. But I wouldn't necessarily have to if I wanted to get just one cost of goods sold. But for each individual item, I'm going to want to keep an update, like you would for employees. When I do that, well, we haven't done employees yet, but when I do employees with their paychecks, when I do the journal, I'm going to do just one overall journal that says wages expense, $10,000 for all the employees. But off to the side, I'm going to have a little card for each individual employee so I know exactly what to pay them, minus the taxes that I have to take out. That's kind of what you do for inventory. You make one big cost of goods sold journal entry that has all of your inventory together. But you're going to have a separate file for each piece of inventory, so you know what it cost you to buy that exact item. Now, then we said, well, once you sell something, how do you know what the actual cost of goods sold is? Back to my surfboard example, is it $60 or $70? That depends on which method management gets to choose. Management chooses which one they want to use, which one makes sense for their business. They can choose this one. It's called FIFO, which stands for first in, first out. First in, first out. And if management deems that this is the best for their business, this is what they're going to use, FIFO. I'll go through some of the advantages and disadvantages in a second. That's what this means, advantages, disadvantages. LIFO. Last in, first out. So the items that I most recently purchased, the last ones into the store, I just purchased those $70 surfboards, the expensive ones. They're the first ones that I have deemed to sell. Whether that actually sold that physical one or not, I don't know. Kind of think of it like buying nails. You buy 2 sets of nails and you dump them into one big thing at Lowe's, and then you just grab some, with a glove probably, but you grab some. You don't know which nails you bought or sold at Lowe's. There could have been some from the more expensive batch and some from the less expensive. No way to tell. Average cost takes the best of both worlds in a way. And we're gonna see average cost. It's better just to see that when it comes, when we do an example. If I had a graph, and this over here was dollars. So I'll say this was 200, 300, 400, we'll go up to 500. And then down here is units sold. Let's say I sold 100, 200, we'll go up to 400. And this seems to be my cost. Actually, let's not make this in units. Sorry. Let's make this in months. Time is better. Time, that we'll look at it in terms of months. So instead of one month, 2 months, so it won't be much changing for you. Time in months. And this is me buying, let's say, a pack of 5 surfboards. I have to buy surfboards in packs. Let's say I can't just go to the manufacturer and buy one surfboard. They won't sell it to me like that. I have to buy it in bundles. Well, in month 1, or year 1, however we want to look at it, if I bought 5 in year 1, it cost me $200. In year 2, that may make more sense. In year 2, it cost me $240. Year 3, it cost me nearly $300. That's not very straight. Year 4, it was up over $300. All right, so my price per item, like typical, is going up. Kind of like gas, kind of like any other item. The price usually over time, due to inflation, continually rises. Does that make sense? Right? Okay. If I was to compare my cost of goods sold, year 1 to my cost of goods sold in year 4, which one's going to be higher? Yeah, year 4. This one's going to be higher cost of goods sold than year 1 because of the period of rising prices. So what's that going to do to my net income in year 4? If my cost of goods sold is higher, my net income is lower. Yeah, because cost of goods sold takes away from our income. Okay. So which one is more higher then? With, well, let's go back here now. Let's look at FIFO. FIFO, first in, first out, meaning the first ones that I sell, if we're talking in months now again, because that makes more sense. So let's say I opened up my business here in month 5. After collecting inventory, and the price kind of continually went up. I sell my first few surfboards using the FIFO method. First in, first out. I sold these guys first. With FIFO, an advantage is your cost of goods sold is low, meaning your net income is higher. That could be definitely a good thing. Now, again, this is assuming period of rising prices. A disadvantage would mean that my cost of goods sold does not necessarily reflect current prices. So yeah, it looks like I made quite a bit of money. My net income's pretty good, but I'm using my low items, the items that didn't cost me very much. It's not realistic to today's prices that are much, much higher. So cost of goods sold is not necessarily a good reflector. An advantage for the FIFO though, my ending inventory, I still have these guys left, the expensive ones. So my ending inventory is a good reflector of current prices. LIFO, just the opposite. My cost of goods sold are much higher using this method. I'm selling these things first, the items that cost me over $300. Therefore, my net income doesn't look so good. But you have to remember, even though these two net incomes are going to be different numbers, I sold the exact same item. It's just how I account for it. I still sold 5 surfboards, and it was the same 5 yellow surfboards that I sold using FIFO. The customers didn't just take them back and say, okay, you switch methods, so I'll switch you surfboards. They don't care what method I use. This one is just the opposite. Ending inventory from using LIFO, these are the guys I have left, these cheap items. Ending inventory does not reflect very well on current prices. So because my inventory looks low, it may not be as low as it looks in dollar amount. And the cost of goods sold, it does reflect current prices. My cost of goods sold reflects these items that I just bought. What current market prices are doing. So it's a little bit more realistic using LIFO. Average cost is usually somewhere in the middle. It's usually not a great representation of cost of goods sold, but it's not nearly as bad as FIFO. Ending inventory, not as good as FIFO, but not as bad as LIFO. And we're going to see how that works in just a little bit. How the average cost is kind of in the middle, and that's why a lot of stores use average cost. But if you're a store that sells milk, which one of these makes the most sense for you to use? What do you think? If you sell milk in your store, you would be more likely, you wouldn't have to, but you would be more likely, and which one would follow your products closer? First in, first out. Yeah. When you buy milk, the first ones that come in, you want those to be the first one that goes out the door. You don't want these most recent items to be the first one out, because then these guys are going to get old and you're going to lose out. And you're never going to sell them. You want these guys sold first. So it would make more sense if you're a grocery type store to use the FIFO. If you're an electronics store, it may make more sense for you to use LIFO. People always want to have the latest and greatest. So they may buy these more expensive items that just came out. Let's do a little more detailed example with my surfboards. I'm going to draw a little example. It's not going to be a great picture, but it'll do. January 4th, let's say I buy a pallet of my 5 surfboards, and they cost me $60 each. So when I add them all up, I spent $300 if they're $60 each. And I it was just announced that there's a surfboard party, and it's going to be really great. A lot of people coming, so I had to buy more. And the price of wood went way up, or the price of whatever the surfboards are made of. And now they're $70 each when I bought them. So I spent a total of $350. First day of business, I sell 7 surfboards. We're going to look at how this compares, looking at a very crude income statement. Sales, cost of goods sold, minus my gross, or equals my gross profit. And let's say I sell these surfboards for $100 each. Again, I have no idea which surfboards I sold. They get mixed together, and then it's too hard to tell, because they are identical. Let's assume the business uses FIFO. How much sales did I bring in knowing that I'm using the FIFO method? How much sales did I bring in? This isn't hard. 700. Yeah, sales. Sold 7 boards, $100 each. $700 in sales. Now, what the little bit more difficult part is, it's not hard, but a little bit more, is the cost of goods sold. How much am I going to have to journalize and put down eventually on my income statement as total cost of goods sold?
340.
340?
420. Because you used the $60 each.
Oh,
Almost 420.
Just 400?
You were on the right track, I think, but you're almost there.
440?
440. Yeah. If I do FIFO, first in, first out, that means I sold these guys, are all gone, and I sold these guys. So my cost of goods sold is the $300 up here, all of them, plus 70, plus 70. Gross profit of $260. And if I was looking at my balance sheet, how much do I have left in ending inventory? Huh?
Oh, sorry.
Yeah, 3 boards.
210?
Yeah, 210. 70 plus 70 is 140 plus 70. I have $210 left in my ending inventory. All right, let's pretend that we did it the LIFO way now and see how it's different. Again, I sold the exact same boards. It's just financially, I'm going to account for it a little bit different. Do my sales change using the LIFO method? Mm-mm. Sales don't change. I still sold 7 boards for $100 each. What does change is the cost of goods sold. How much is my cost of goods sold now?
470?
Yeah, $470. I sold, these guys are all sold, last in, first out. So the last one in was this one. These guys are all gone. And those two are gone. $350 here, another 60 and 60. Does come out to be $470. How much in ending inventory do I have left?
190.
Yeah, 180. I sold the exact same boards, yet I have different amounts in my ending inventory, depending on the method I use. And either one of them is okay, as long as you stick with the same method. You don't want to go switching back and forth. That's not good. The last way, average cost. To get average cost, we use a formula. Not hard. All you need to do is take your total cost, how much have you spent, total cost of inventory, and divide it by your total number of units. And that equals the average cost per item, per inventory item. With this one, since I bought the exact same number in each day, I bought 5 and I bought 5, it's going to come out real nice. When you start buying different quantities, say you bought 4 and you bought 7 down here, then your average cost doesn't come out so nice. That's why you have to do this formula. You can't just look at this and say, oh, the middle here is $325. That's how it'll work out, but that's only because I bought the same number each time. If you start switching it up, which is more likely, then you have to use this method. You say total cost, $650. I spent $650 in boards. I bought 10 boards. I have 10 waiting to be sold. $65 per board. Now that may seem, oh yeah, that seems easy because I could have just taken the average of these two. But again, that only works when you have the same number each time, and that's not realistic. You have to do it that total cost over total units. Sale price for average cost. No change. Cost of goods sold. How am I going to get the cost of goods sold now? I don't necessarily, with average cost, I could sell this one, this one, this one, this one, this one.
Use average low.
Say I sold those 7. How do I know what the average cost is? Because I don't know which ones I really sold.
You just do 65 times 7.
Yeah, 65 times 7, very good. 65 times, cost me 67 per item, and I sold 7 items. All right, let's put this into some practice and make this a little bit maybe easier to follow, I think. Get out number 26, which is a Excel looking sheet, has a whole bunch of lines, and then get out number 27. 27 is the actual item that you would turn in for homework or something. This is what the test would look like, or the homework, where the information comes from. But 26 is where you do all of your calculations. Actually, I need to write it down. So you should have out, this is what number 26 looks like.
You need one, please.
We're going to be filling out this sheet. When we're all done, we'll be able to answer 1 through 5 and provide the journal entries out here. I only ask you for the journal entries on the date of the sales. But I'll put up on the board anyway these journal entries just so you can see them. But these are the only ones that I really am concerned about that you definitely know how to do. And we're going to start using the FIFO perspective. So on the sheet that I've given you, notice that the dates don't necessarily all go in order. I have all the purchases together, and then I have the sales listed together. So we just got to keep that in mind. The dates aren't necessarily all in order. What I'm going to do with my sheet here, though, is keep track of my inventory item. Notice I have to do this for every single inventory. Every single little card that I have, each inventory item, I'm going to have one of these little sheets that goes along with it. So I want to keep track of this one in particular and then each one in particular. So on this first one, I note here that I bought 100 units, whatever those are. I bought 100 of them, and I tell you that they cost $3,000 total. So then you can easily get this item. Do a little division. If I bought 100 of them and they cost me $3,000, that's $30 a piece. So I can't put my sales in. I do have some ending inventory. Even go down to the next one so you can kind of see the pattern. I bought 300 more items. The price per unit goes up a little bit. And then over here, you can do it one of two ways. You can do as I did and skip a line and then just transfer this right down, because you still have it, and you now have these guys as well. Or, if you wanted to save a little room, you could just put this one right up here and show that you have the old 100 and the new 300 as well. Either way is okay. If you do decide to bring them both down, leave a space so you can definitely know that this is a new grouping. Now, we're doing perpetual inventory, so I don't want to do my 4/6 purchase yet, because that hasn't happened. The next date that I come to is 4/4. I have a sell. I sell 150 units, and I bring in $6,000 total. So I'm going to come down here, I have 4.4, and I sell 150 units. So I'm going to have to break them down with cost of goods sold. Notice I have a space here for your total sales. Don't put 6,000 anywhere over here. This is cost of goods sold, not my sale price. This is my sale price. So I'm going to put 6,000 here. That's how much I sold them for. How much is the cost of goods sold? How am I going to do this? How am I going to show 150 items being sold using FIFO? What do you think? How am I going to do this?
The first 100 are the first, are April 1st price,
Yeah? Keep going.
and then the last 50 would be the April 3rd price.
Right. Very good. I'm going to move it up a little bit so you can see it better. So what I did, first in, first out, all of these guys are sold. $50 of these guys are sold. 50 at $31 a piece. And then I'll go ahead and total everything. Here's my total. I did sell 150 items. Total cost of all of those items was $45.50. Now let's get caught back up with the journal entries. I told you I would do these. I'm going to go ahead and do them. I don't ask for them, but I want you to see them too. So on 4.1, I bought inventory, and let's assume that I bought it on account from the manufacturer. Again, I tell you just the bare bone prices. I'm not worrying about shipping right now or any purchase discounts. Let's just say it was an easy 3,000. And then on 4.3, bought more inventory. Now the journal entry, the first one that I would want you to do on your sheet there, 4.4. What's the, I always have two journal entries when I make a sale. The first one says, what did I get? Let's assume I sold them for cash.
You got
Cash, how much?
6,000.
Yeah, 6,000. That's what it tells me there in the problem. Sold 150 units, total of $6,000. And then part two is what I just determined. My cost of goods sold. I just got that from right here on my sheet. The last thing that I need to fill in on my sheet is how much do I have left for next time. These guys are gone. out of the 300, I have 250 left at 31 bucks each. So then just do a little bit of multiplication to get that final number. That 7,750, that better be what my T account shows as my updated total. If I go through that number, this number, whatever you have right here, especially when we talk about this on Thursday with the take-home project, because you're going to do this as part of your take-home project, this number better equal what your balance is for the inventory. If I add up, subtract out the 4450, take 12.3 minus 4450, I do get 7,750. Those two better equal. Now we come to our next date, the 6th. I bought new stuff. $500 units, and I'm going to bring those 500 units either right here underneath this one or bring everything down to show I have those two separate priced items in my inventory. On 4/8, it's time to do my next sale. The easy one is the 8,000. I give you that. I tell you what I sell it for. What we need to determine is what was the cost of those goods that I sold. I sold 200 items, so those 200 items came from my first in items here at $31 a piece. I now have all the information I need that I can answer the 5 questions here. Total sales. What's total sales? More than that. Yeah, 14,000. Remember I had a sales revenue here, T account item, T account of 8,000, 6 and 8, 14,000. What's my cost of goods sold?
$29,750.
Yeah. I like to put all the answers towards the bottom of my sheet for my benefit. Gross profit, hopefully you've got gross profit down, what that means. Sale minus cost of goods sold. I look at my sheet, I've got 550 items left total. And the cost better equal what my inventory sheet shows. My T account and ending inventory sheet. Now for that one right below it, right below number 5, for periodic purposes, what would cost of goods sold be? Well, for periodic purposes, remember periodic means we only update our stuff every once in a while. And so let's say we only update it after all of the known stuff that went on here for this week, 4/1 to 4/8. Let's say we do an update after that point. So when I tell you to do it with the equation, how much beginning inventory did I have? Before 4/1, how much inventory did I have before 4/1? 0. Plus all of my purchases for this week. How much in purchases did I have this week?
No, 29,300.
Yeah, 29,300. Now I didn't have any returns or anything, so that is my cost of goods available for sale. It's very easy on this one. Now the only thing I need to do is determine what's my ending inventory. And that's the only harder part on this one, and it's not even that hard. I sold 350 items. If I'm looking at it in one big bunch, because that's what happened this week, I just bought some stuff, and I'm just going to look at it in one big lump instead of every time there's a transaction. First in, first out tells me I sold all of these, so all of these are sold, 100 of them. How many of these guys did I sell? 250, yeah. If I sold 350 total, first in, first out, I sold all of these. That leaves me with 250 left. And they came here. 250 at $31 each. What's 250 at 31 times 31? 7,750. You're going to see that this number did match the other way I was doing it. Now that actually gave me, I'm sorry, that actually gave me my cost of goods sold. I could have done it the other way and said All right, if that's what I had sold, what's left then is 50 items out of here, because I sold 250. So I have 50 left at 31. And all of these left at 31, all 500, or at 34, I should say. My ending inventory can just as easily be computed to finish out this equation. The two numbers matched. The cost of goods sold matched either way I did it. That's not going to be how it is when we do the next one, the LIFO. It's a little different. So let's go to LIFO. You can either start a new sheet, or if you have room and you've only used about half of your sheet, then just draw a line and start the second half using LIFO. Either way, doesn't matter. LIFO isn't that much different than FIFO. In fact, it starts out exactly the same with my first two purchases. Into play on our first sale of 150 units. On 4-4, I sell 150. And I've got to use the last in first out. The last ones in are these more expensive items. Those are the ones I'm selling this time. I'm selling the much cheaper, or the more expensive items, because those were the last ones to come in at $31 a piece.
So it doesn't matter, like, what one you choose, you're pretty much, your ending number is gonna be roughly the same. I mean, essentially,
Well, it could be.
like, are you saving money if you,
Nope, you're not saving money.
so it's just whatever way you feel like doing it?
Yeah, you pick away, and then
There's no like benefit, like, I guess financial benefit between.
there is one financial benefit or cost, depending on how you look at it. Go back to, well, when we finish this one, remind me if I don't, when we look at the gross profit compared to this one and the other one, when's the only time that your net income being higher would not be so good for you? Can you think of an instance where if net income was high compared to using it the other way where it's a little lower, when having a net income higher is not as beneficial? There's one main case.
It may seem like you've sold more than you actually have. Like your inventory might not be accurate.
No, that's not it. But think back to 3 or 4 hours ago. What were you doing?
We didn't do taxes.
Yeah, I was in Texas. So, so your taxes would probably be off your.
Yeah, well, your taxes are going to be different.
It's not gonna be higher, you'd be like,
Yeah, if you have a higher net income, you pick the method that has higher net income, you're going to be paying higher taxes.
no, would that depend on how much higher it is? Like, I mean,
Yeah, well, we're going to see here the differences between the two, the gross profits. They're going to have a difference. And you're going to pay, if you're in a corporation, 30% on your net income. Well, would you rather pay a net income, pay 30% on a lower number or a higher number? Hopefully a lower number.
So, because I was thinking that it depends like how much, I was thinking it's for of a tax bracket for some reason, like even if you're a little bit higher, you wouldn't necessarily qualify for higher tax, would you, or?
That, not with this case, not with this isn't tax bracket. You pay 30 cents on every dollar you earn.
Okay.
Not really quite, but in big corporations, once they hit the higher number, because corporations are kind of like individuals, they do have tiers,
Yeah.
but once they hit the higher tiers, then you pay 30 cents on the dollar.
Oh,
And so would you rather pay 30 cents on a couple thousand less? Sure.
yeah.
Makes sense.
So on the LIFO journal entry, this one is almost identical, except the only difference is the cost of goods sold number. The rest of this journal entry is the same as the FIFO one. I still had cash for sales revenue. It's just the items that I sold cost a little bit more using this method. Okay, I just bought 500 more items. So I'm going to include that in my ending inventory. It doesn't matter if you just want to plug it in right here or relist them. Once I have that updated last purchase, I can do my final sale, because those are the items that I'm selling. I'm selling those most recent purchase that I just put on there of $34 a piece. So my cost of goods sold for this one is now $6,800. So on a quiz or test or homework or whatever, this is what I would be wanting to see. It's just show me your sale journal entries. You put these in, that's okay. Just extra. This is the only ones I require are your sales, showing me how you journalize it. The reason why I have you journalize it is I got to the point a couple years ago where a lot of the students would know how to do this. But then when they got to the take-home project, they'd be like, well, I know how to do this, but what is the 4650? Where do I put 4650? They didn't realize that is your journal entry number. They could get the number, they just didn't know what it was. And that's not good. Now can figure out your final numbers. Notice the sale price didn't change. Doesn't matter what inventory method I use. I still brought in $14,000 in sales. However, my cost of goods sold did go up. Gross profit did go down. Therefore, I'm paying a little bit less tax. Two items that aren't going to change. I still sold $14,000 of stuff, and I still physically have 550 units. It's just what do I value them at is going to change.
this only to help explain what these are, or would this actually be done with an accounting, like,
Oh, no, this is actually how it's done.
okay.
It's just fortunately for most people, we have computer programs that really help do this
Mhm.
nowadays. Otherwise, if you didn't, then you'd have to be doing all this by hand, and I mean, you had to do that before, but now you're getting to at least see, because if you do it in QuickBooks, you're like, oh, well, it got me the cost of goods sold, I don't really need to know. You really do, you need to be able to see how QuickBooks is doing it.
Mhm.
Otherwise, somebody comes and says, why is my cost of goods sold as it is, and you're like, I don't know. That's not a very good answer. You could actually show them if needed to some owners who, an owner should know, they should want to know. Yeah, this is exactly what a computer program does. If you had your own little small business, and you would probably do it the perpetual, the periodic way, you would look at this, say I sold 350 items, here's in my little chart what I bought, and then I would say, okay, I sold 350, so I sold, using the LIFO method, I sold all of these for my purposes.
If you were in a small business, would it matter which, would it,
You would use one of them, you just pick.
Yeah.
You would definitely pick, you would use one. Now the last method, I think it's shorter, it's a little easier to do. I don't know if it's easier, but it's, I think it makes sense too. Average cost. See if you think it makes a little more sense. So with this one, in my ending inventory, I'm never going to have more than one item listed, because I'm always going to have the average of whatever I have. When I bought 100 and then I bought 300 more, I come over here and I make a little 100 from before plus 300 that I just bought at a cost of $9,300. Then we do that equation that I just had on the board a little while ago. Total cost over total units. And that's going to get me this new number. So instead of having a $100 set and a $300 set, I now just have one $400 set at $30.75 a piece. When I go and sell 150 units now, those items cost me my brand new average cost that I just figured, $30.75. I sold 150 items, and it cost me $30.75. I'm going to erase this. When I sell something, there's nothing new to add into my costs. So I just get rid of 150 items. And the price per unit stays the same. I didn't add anything new with a different price. So there's no change in that whenever I just sell something. Then I added another 500 items. So I'm going to add 500 to my previous total, plus its cost of $17,000 to get one brand new amount. When you're all done, your final number, because of rounding, your final number may be a little different. That 3292 was rounded to the nearest penny, and that's what I'm going to want you to do. Always round your average cost to the nearest penny. Now, when you go and have to work it out, your numbers could be off by a couple dollars, and that's fine. A couple dollars when you're talking about tens of thousands isn't a big deal.